9 a.m. in Shanghai, Shenzhen, and here in Hong Kong, you're watching The China Show. I'm Yvonne Man with David Ingles. We're counting down the open of markets in Greater China this morning. Our top stories: China's memory chip champion CXMT set to begin trading in Shanghai after a nearly $10 billion IPO. That's the biggest mainland listing in years. CXMT's debut comes as tech shares lead gains in the region. Stocks also getting a tailwind from lower oil prices, with the U.S. and Iran holding off on new strikes. And DeepSeek set to hit pause on new fundraising following viral reports of unverified comments made by its founder about headwinds for China's AI industry.
A very good Monday morning to all of you. Welcome to the program. A lot to get into. Perhaps by the end of the session today, we will have the biggest company listed in mainland China, of course, on the back of this massive listing, which we'll get to in a moment here. But the stage is set, certainly for a massive debut, whether that's on the macro side, how it's priced, the indications on demand as well. Let's start with the macro and really the backdrop here with the pullback we're seeing in energy prices, pullback in yields, which really bodes well for risk assets as we go into a fresh trading week. Flip the page, please. Have a look at the Nikkei, the Kospi index. Taiwan is coming online. It's shaping up also to be a very busy news as far as Southeast Asia is concerned. Back-to-back tightening coming through out of Singapore. Flip the page, please. And in the last 30 minutes, breaking news that Bank Indonesia Governor is stepping down. So we'll see what market reaction will be on the back of that. S&P futures are higher, as you can see. We alluded to yields and the dollar on the weaker side of things to the downside right now. The setup as we go into the open today, A50 futures, and just note that we have put together 4 straight weeks of gains, outperformance, China over the U.S. So let's streak obviously underpins this massive listing. It's set to debut in the next half hour or so, and this is going to be a big one, literally and figuratively.
Yeah, a big one here, and on the brink of really making history, as you say, right? And if we actually see a blockbuster debut, CXMT is on course, as you say, to be one of the biggest companies by market value, and even surpassing the likes of ICBC or Agbank, and really surpassing the IPO of Agbank as well. So certainly there's a lot. I mean, the numbers are also very auspicious, right?
Yes,
the number of
the ticker.
6s and 8s, right? They raised 66.6 billion renminbi in this IPO, sold at 6.688 billion shares at 866 renminbi a share. Get that, if you can say that in a tongue twister there. But certainly it just goes to show, right, the symbolism of this, right? It really explains really China's ambitions of being, a chip leader in this. And CXMT really embodies that in some ways here. So that really is going to be the narrative many investors are going to be looking into as we look ahead to this big listing today.
It's the 4th globally, and as far as the sort of the memory story is concerned, and what a time to be listing. Also, the interesting is the timing, right, on the back of the recent roller coaster ride we've seen in share prices of Micron, SK Hynix, Samsung, of course, and this is number 4. So there's this global relevance footprint. Also, the timing is interesting too. It is a multi-year story, just to tell you about that. What's interesting too is when you look at some of the pricing targets that have come out so far this early, right? So Nomura has a 13x, I think, upside implied based on their price target there. A couple of other, on the buy side, I think, from Aberdeen, a comment coming through also saying that don't be surprised if we see a couple of 100%.
A couple hundreds.
100% as we go into the first trading session. I think the magic number we're looking at here today is 330%.
Yes.
If we do see the share price pop beyond that, this would make it bigger than ICBC in terms of market cap, in terms of onshore listed Chinese equities. We're
talking about $500 billion is the current sort of market cap that we're talking about, right? 2.7, I believe, 2.6 is what ICBC is worth. So certainly we're watching, of course, the key milestones here. But if we reach that point, I mean, it looks like, the first couple of days will be quite interesting, right? Because there is no daily limits for the first 5 trading days. So certainly we'll see how much really momentum there is behind this story here. The retail portion is quite significant as well. We're talking about more than 200 times oversubscribed. You look at in terms of the number of orders that individual investors have made, we're talking about 10 times a retail order book of SpaceX itself. So yes, we might be dealing with some liquidity shock, but even HSBC says, look, it might just be a day we might see a rebound basically the next day.
And that takes us into, I think it's something that is worth pointing out when you look at onshore Chinese listings, right? And I think I was looking for the number here on compared to the SpaceX, right? So this one is actually 7 trillion yuan worth of shares committed, or at least retail investors had raised their hands to allocate that amount. And number one is you do have things priced at a massive discount, usually compared to overseas markets, because regulators do tend to keep a very sharp eye on, it can't be massively overpriced. They watch out for retail investors a lot. And I think given all of that, and I think compared to Micron, for example, this one I think on price to book is trades at a discount to that too.
50, almost half price, or more than half price. 56% discount to the average price to book to the likes of SK Hynix, Micron. It's even steeper discount. I think it's about 77% when you talk about comparing to some of these Chinese
like
domestic,
and SMIC.
Yeah, those SMICs, right? So certainly that's going to be a big, maybe appealing sort of factor for the stock itself. So certainly there's going to be a lot to talk about, not just about the stock reaction. What does it mean for China hardware and really that trade that continues to be quite volatile? The
self-sufficiency exercise. Okay, suffice to say, it's going to be a big story we'll be tracking as we go into the open today. Let's bring in our first guest on the show today, Shihao Li, Asia strategist at CITIC CLSA. Good morning and very nice to see you.
Good morning. Thanks for having me.
What a time to be having this conversation.
Time.
Okay.
Big time.
So take us through your conversations within the industry with clients about this listing.
Well, I think the clients are very excited at this moment because, but in the past 2 weeks, we see some massive corrections within the stock board. I think it's largely due to, this listing, this huge listing. Because people have the concerns about the liquidity shock. But our estimation is that actually this liquidity shock could be quite limited because, if we value Changxin as a 3 trillion RMB company, then actually the free float market cap is just 200 billion. So usually within the first trading day, the turnover could be as high as 50 to 60%. So the first day is clearly it will attract a lot of liquidity. So that will give the trading volumes of this company to be around 100 billion. So that will account for like 26% of the all stock board trading volumes.
One stock.
Yeah, one stock. So that's a huge impact. But after that, I think once the volatility is subdued, like you said, I think this valuation would be very attractive for not just this company, but all the self-sufficiency theme. Yeah.
So you think this, instead of some saying, look, this mega listing is a signal of a peak in this whole AI trade, you think that this could actually renew the rally we're seeing domestically within
exactly. I think this is a buying opportunity. And I know some clients would say that, okay, usually this big IPO would earmark the end of the bull, but it's not necessarily a very effective predicting factor because the bull market will always be accompanied by huge IPOs. The IPO activities will always resume once we see a bull market, so it's a natural thing. The issue is that once because we have seen a huge correction among the technology board because it's a very crowded trade in the second quarter. Now after this healthy correction, I think it's already been a very attractive buying opportunity, especially for the domestic semi supply chain now. Yeah.
I mean, some of that, you mentioned 3 trillion.
3 trillion, yeah.
Some of the other estimates out there, 5 trillion. So easily we could see the company go a few multiples higher today. Should we be surprised if we see a 200% gain at the open today?
No, I won't be surprised like that because even if you look at those large IPOs in the China Asia in the past, there is no shortage of liquidity because not just the retail investors but also some onshore hedge funds and the mutual funds, they're in high anticipation of this big company as well. And not mention that Changxin is the fourth player in this very high anticipated value chain. So I think people will put heavy bet on this company. Yeah.
I mean, the retail portion is 200 times oversubscribed, right? It's tightly held, to your point, in a sense that the free float is a very small percentage of really the eventual size of the company. What would your advice be to retail investors who didn't get the allocation? They're going to scramble at the open to get it. So how do you trade this the first few hours and the first few days? Two separate questions.
Well, according to our observation in the past. Actually, in the first 5 days, the stock price would turn to be very highly volatile. So if you don't have an allocation in the IPO session, I would say that it's not going to be a very good trade idea, actually. But we can wait until the volatility is subdued. Eventually, it will be, I think the company should be measured at least 3 trillion RMB. So on top of that, I mean, it's a buying opportunity in the longer term. Yeah.
I mean, it sits at an intersection of very big themes in China, right? You're talking about AI. You're talking about tech self-sufficiency. The fact that it has this sort of heavy state backing as well, how supportive is that really for the overall, just the stock and really the industry?
Well, I think the China's story of AI packs has just started yet, because if you look at those big internet platform companies, their free cash flow is actually even healthier than the U.S. peers. So that means, you know, and not mention the total amount that those leading companies, those internet platform companies invested in AI capex is still lower than the U.S. So that means the China still need to invest heavily. And always, you know, we keep telling our clients that there's 2 baskets in China Asia. One is the U.S. supply chain with names centered in the telecom equipment because they are the providers to the NVIDIA. As for another one is within the domestic semis. So I think this late cycle catch-up story is happening right now. And not mention that Changxing, it has made 100 billion in the first half. So, 60 billion in the first half. So for this year, the earnings should be around 100 billion or even higher. So with that amount of cash at hand, I won't be surprised if it started investing domestic equipment as well. So the whole domestic supply chain would be the beneficiary of this new trend, and not mention their valuation has been quite attractive at this moment. Yeah.
I want to look at the company. We've talked a lot about the stock. The company itself. Let me take the other side of the trade here and just be the devil's advocate. Are we assuming 100% probability that the company will become successful? Like, what are the risks to watch here going into something as blockbuster as this one?
Well, I think the demand for DRAM and also memory chips in the next 2 years is still very strong, very robust. I think this is the consensus. Not mention, so that means at least we have 2 year very clear visibility of the top line growth for this company, not just for this company, but also for the whole industry. Not mention that we still need to give a premium to the domestic semis because they are catching up very quickly to the domestic semiconductor supply chain. So that everything combined, I think, you know, this will still be a big trade for at least the next 2 years within the China Asia.
Yeah, speaking of China Asia, I mean, even just we've been looking at the momentum that we've seen coming back into the China markets, right? Where we've basically seen 4 straight weeks of them outperforming the U.S. In some ways. Can we continue on this sort of rally here right now? And what do you think is driving that?
I think we remain very constructive. I think this rally will be continued for this year at least, because well, the problem I think is that AI trade used to be very crowded because if you look at the onshore mutual fund position in the second quarter, basically 60% of their allocations are now in the TMT sector. And also for the onshore hedge funds, I think at least 40. So this kind of crowded trade has been in a place in the second quarter. We assume that after this correction, maybe these crowdness have substantially subdued. And not mention, we also have the similar deleveraging problem in the past 2 weeks because the margins, the net increase in the margins in the past quarter has been extremely centered in TMT sector as well. Our estimation shows that maybe 60% of the newly increased margin in second quarter are all going into the TMT sector. So, but now, as you check the margin balance, it has dropped from nearly 3 trillion to around 2.6 or 2.7 trillion RMB. So we are back to the healthy level. So I really don't think we should panic at this moment, given we have very clear visibility for the next 2 years. You can never easily find a trade as clear as this one.
Okay, what's your overall take on the health of the A-share market recently? So you mentioned margin debt, for example, as a good indicator of that. I think very recently there were reports, in fact, there was evidence of the national team coming in and providing a floor to the markets. Well, what do you think of the timing of that. Why was that necessary at that point in time, very recently? It didn't seem like the market was going off. And just the outlook in terms of policy, because we are still waiting, I believe, for the Politburo to come out with their own take on the economy specifically.
Yes. So actually, you know, I mean, throughout this whole year, we can see there's a clearly K-shaped divergence among different sectors. The TMT sector is leading. The healthcare is trying to catch up. The consumption is still sluggish, as reflected not just in the economic data, but also in the market. There's a similar pattern, not just within China, Asia, but also universally. You can see in many other markets, this is the similar pattern. So actually, we remain a mediocre or just normal expectation from the Politburo meeting. We really don't expect they will carry out large bazooka at this moment. Given we have made several breakthroughs in the technology side, I think that will give confidence for the policymakers to make sure that at least we can keep the GDP growth within the target range, 4.5% to 5%. Yeah, we have achieved that for the first half of this year. So I think there's no need for the market, at least at this moment, to react or predict or anticipate that there should be something big from the policy side. So everything combined from the top-down view, we think, okay, this K-shaped thing will still be like this for the second half, and the clearest trade at this moment is still the domestic AI. So that is why we remain constructive at this moment.
Okay, we're looking at the Starboard, the Star 50, one specific name going into today. Thank you so much. Very nice to see you.
Thanks so much for having me.
Have a great week ahead. Shihao, leader, A-share strategist at CITIC, CLSA. We'll have more, of course, on our coverage coming through here. This massive debut today of CXMT. On the star market, Counterpoint's research director, Hwang, will be joining us at about the open for his reaction and his take, of course, on the industry and where we go on the macro side of things here. Counting down to the open of trade here in Hong Kong, in Shenzhen and up in Shanghai, we're called higher, 0.5%. The opening bell 13 minutes away. This is the China Show.
All right, we are just minutes away from what looks to be a mega IPO coming up. CXMT's listing follows a near record $9.8 billion IPO, and a debut pop could make it the country's most valuable company. Our China correspondent Ming has more on how we got here.
Changxin Memory Technology, or CXMT, one of the crown jewels of China's high-tech industry, debuts in Shanghai's Nasdaq-style star market in what is the second biggest IPO ever in China. 10 years ago, the Hefei government made a big bet on the firm when private investors shunned it. Taking on giants like South Korea's Samsung and SK Hynix seemed like a risky bet then. Founder Ming set his sights on standard memory chips called DRAM, the silicon essential for computers to process data. After years of losses, the company finally logged historic returns, pointing to a net income increase of more than 2,200% in the first half of this year. Driving that windfall is the glut in data center demand that's pushed up chip prices several times over. Competitors slashed DRAM production and shifted to build more lucrative high-bandwidth memory, or HBM, chips. CXMT swooped right into that supply gap, even prompting bellwethers like Apple to consider buying its chips.
Initially, the Chinese were the kind of low-end, cheaper product producer, but over the last 20 years, they've shown in so many industries that they can really move up and become competitive forces.
CXMT is at the cornerstone of President Xi's self-sufficiency push, and nowhere is this clearer than here at the World AI Conference in Shanghai, where China's latest tech is on full display. Some are calling this a watershed moment, the emergence of a homegrown chip champion relying on local suppliers, local data service to test and refine its products.
If you look at the entire Chinese AI infrastructure build-out and model build-out, there are so many players in this area. You're talking about Huawei, Alibaba, Tencent, ByteDance. But in memory chip making, especially HBMs that is powering basically entire AI compute build-out, CXMT is the only viable player in this industry for China. So that's why the company is so critical for the entire project to win.
But the elevated profile has drawn scrutiny. The Pentagon blacklisted CXMT last year, citing its alleged ties to the Chinese military. But CXMT has managed to dodge the stricter US Commerce Department entity list, preserving its access to US technology. For now, though, memory chip shortages are expected to last at least through 2027, and CXMT is positioned to ride that boom. Its mammoth listing would immediately catapult it to one of the largest firms in China. That would build momentum for other companies in the deals pipeline, from rival Yangtze Memory Technology to Baidu's chip unit Kunlun Xin and AI poster child DeepSeek. Min Lo, Bloomberg News, Shanghai.
Right, lots of big names to watch. Just to mention in the pre-markets, and we'll have a full preview of markets day ahead, CATL out with earnings, massive beat. You have a buyback there, Trip.com ending. That antitrust probe shares are also up there on the back of that fairly chunky fine they're coming through out of authorities. We have lots more ahead. The pre-markets are looking like this. This is the China Show.
Your agenda today, yes, it is that CXMT debut, which is really the big story of the day. But of course, we did talk about Trip.com and that fine, CATL earnings, which were pretty blowout as well. So certainly there's a lot of China stories to tell you about. Industrial profits data comes out in a few minutes as well.
Oh, that's right.
You have trade data coming out later this afternoon. And we're watching, of course, the oil plays, given that we've kind of come off of $100 oil here. But yes, CXMT,
Boom.
There you go.
Here we go. We are, the headline just crossing, CXMT opens at $49.50 a share.
Wow.
The IPO price was $8.66. You do the math, that's about 7-8x. We're looking at a 480% pop in the opening moments on CXMT, which, if as things stand, would be enough to make CXMT, as things stand, the biggest, most valuable company in terms of market cap listed in mainland China in the opening moments of the company being a publicly traded security.
Yeah, certainly we've reached that milestone pretty quickly here. Just a few first seconds of the pre-market here. This is, of course, the fourth largest maker of DRAM chips here. And really, Beijing's best hope of China reducing its dependence on foreign suppliers here in areas like DRAM, HBM. Certainly that's one thing we'll be talking about with our next guest as well. So certainly there's a lot of symbolism behind all this. You know, if you know China, 6 and 8s are very, very lucky numbers here. So certainly look at that ticker itself, 688825. They're hoping for the wealth to keep flowing, Dave.
Okay, so we're going to see how this progresses throughout the course of this session. This is also on the retail side of things. We talked about it in case you missed it. Was massively oversubscribed, 7 trillion renminbi in orders being placed, of course, and as far as that retail portion was concerned. So you can imagine a part of that going to be scrambling for parts of this at the opening bell. We have lots more ahead, including the open, including this. This is the China Show. Like a typhoon across the Pacific.
Oh, we just had one, didn't we?
Yep. So two things. One is going away in terms of the weather. The other one is more than enough offsetting the gap that's leaving right now. We're looking at a 470% pop in the early goings of CXMT.
Oh, there you go. Look how small those numbers are, given the fact that you have just so many digits here, 470% gains here. And yes, as Dave mentioned earlier, right, all we needed was a mere 330% to catapult this company to the largest company in terms of market value there in China. So certainly that is one key milestone here. CXMT is making history here as we speak. And certainly what leads to, does this lift the rest of the China chip space is certainly one key question that the market is asking for here today. So we're going to check really what this means. But right now, there you go. You look at the Star 50, though, it is starting things off slightly to the downside here because of the liquidity shock, as some have really flagged here. Whether how long that lasts is going to be one key thing, right? But as our CSLA Shihao just mentioned here, it could be pretty quick in terms of the rebound. just given that there's so much narratives here that you could trade on, the AI trade, the tech sufficiency sort of trade for this company. So we'll see how this all plays out here. So right now that is weighing on the index itself, which leading up to this, was already in a bear market as funds are repositioning for this IPO, Dave.
Yeah, they did have to make space. You had massive, of course, allocations, and obviously only a portion of that was actually given. I'm looking at some of the initial trading here. So you're looking at price for 60% to the upside. We're now closing in on about 400 million shares traded in the opening few minutes of this. So far, in terms of analyst coverage, not a lot still that we understand. We do have one from Nomura, just to give you a sense of how bullish the market is on this, right? So we're coming from about $8 on the IPO price. We're now trading at 50, and the Nomura price target is 116. So we're almost halfway there with just about a minute, 90 seconds as a publicly traded company. So we'll revisit this, and obviously lots more to talk about. This is just the start if you think about things. Let's pivot, please, and have a look at where we are as far as benchmarks go, and lots of other big news, and we'll revisit this, I promise you, in a couple of minutes here. The open today is flat in mainland China. We're slightly to the upside as far as Hang Seng Tech is concerned. That might have to do with the fact that you have CATL trading to the upside. ANH is coming up on your screens. You had a big beat there. Quite a punchy profit number coming through there out of the company in terms of the year-on-year. On top of that, you also had a buyback coming through as well. So we're up about, let's call it 5% on both A and H shares. The other stock we've been tracking very quickly is Trip.com after what now looks to be a resolution to this market dominance investigation here, and a fine from regulators in the order of figures on your screen, 760 million. That's US dollars there. We're up 6%, as maybe that we can now put that behind us, and as far as this one is concerned.
Yeah, maybe this is the end of this sort of regulatory crackdown on really the industry itself and the company, just given what they have been fined really here. The probe found really they employed monopolistic practices centered on these traffic allocation mechanisms, right? Utilizing its platform rules and technology. That's according to the statement that we got from the regulators. So certainly maybe a bit of relief in terms of what the investor community is looking at when it comes to Trip itself. But then again, there's a lot to talk about, right? I was checking the likes of SMIC. I was looking at the likes of Capricorn. Capricorn Tech is actually up. SMIC is actually lower here this morning. So you are seeing kind of a mixed reaction across the China chip space here today, at least today, because of CXMT.
Because of CXMT, right? Yeah. And I think, the comparisons are endless when you look at it, right? So you mentioned SMIC and Hwang Semi, right? So compared to pricing on those two companies, this one was priced at a massive discount. Not that they're apples to apples, right? They belong in different parts, somewhat different parts of the supply chain. You look at how it was priced relative to, I think, Micron, on a price-to-book basis, which is, I think, a closer...
56% discount.
Discount, right? So I think we've more than closed that. Looking at CXMT, which I think is the topic of today.
Yeah, let's bring it back to that, right?
Yeah.
And go to MS Hwang, Research Director at Counterpoint. MS, it's great to have you here, especially on such a really milestone day for CXMT. 400% gains and north of that. How do you feel like this is going to look like for the rest of the week and maybe in the preceding few months here now?
Hi, good morning. Thanks for having me. It's an incredible moment that only 10-year-old baby in memory semiconductor manufacturing industry is getting listed, and initial trading price 446% upside. That's incredible. This company has been catching up the peer groups, but I believe that these share excitement is reflecting the upside potential. Because we need to understand the meaning of the market. CXMT is a DRAM company, and it's supporting the local supply chains initially. And the local supply chain, the China market itself, it has been open to everyone because the CXMT was not capable of delivering what they need. But it's catching up. And as David mentioned, that it's moving to HBM and more sophisticated device as well. So if CXMT is capable of delivering what they need, then the meaning of the market is going to be a lot different than before. So that is the real value of this company's growth potential in terms of market cap. But so far, company has been growing much better than expected.
I mean, it's David here, by the way. As things stand, it's already the biggest, the most valuable company in mainland China. And to your point, it's not been around for very long, and it's in an industry where the moat and barriers to entry are almost impossibly high to enter. Yet here we are. What is your projection in terms of market share? So how do we measure success over the next few quarters and years here for the company?
In terms of capacity, CXMT represents about 15% of the global market share in terms of wafer starts, which is pretty similar to that of Micron. But in terms of a bit shipment basis, this company is currently at about 10 to 11% because of the lagging jump, the technology, the capability. Going forward, it's going to catch up. And at the same time, as I pointed out, this market share is based on the local market. So the beauty of this company is that whenever downturn comes, everybody is shrinking their capital spending. But this company is based on the local market and the local subsidy, definitely. So that's going to be the time that the CXMT is going to excel these market share gain. We project that up until 2028, companies growing up to 13% of the bit shipment market share.
Can you tell us a bit more? I mean, how clear is the profitability of this company now, MS? Because there was a concern a few weeks ago that they're going to use these IPO funds to expand capacity that could bring down memory prices, that could hurt margins overall for the industry right now. Do you think those concerns are overdone in some way, or how do you look at the visibility in terms of the earnings moving forward?
Hi, Yvonne. That's a $1 trillion question. I believe that everyone is focused on scale rather than ROIC. In terms of CSP, in terms of GPU and CPU, everyone is heading to expanding the scale of AI capability. That means now that DRAM pricing, NAND flash pricing has been gone up, and people are a bit of a concern in terms of a stock market. But we believe that as we have forecast, capacities are growing quite rapidly. So about 2028, we are likely to be a bit of an inflection in terms of a pricing. That is a hope. If the hope is not accomplished, if supply shortage is going to be extending beyond of 2028, then CSP companies are going to do something, for example, cutting the SKU, cutting the memory content, or accelerating the software optimization. But up until then, for the next about minimum 2 years, we are still heading to the scale. That's quite clear in terms of visibility.
Can I ask you a direct question? From an industry perspective, are they a threat to SK Hynix, Samsung Electronics, and Micron? How do we need to be looking at, now we have 4 publicly listed companies there in that space?
As of today, it is already 11% market share. It is not a threat because the market is booming. But when the market is in correction, this becomes a threat. And at the same time, as I pointed out, the meaning of the China market is going to change. As CXMTs are moving to more advanced product like HBM and more wide I/O products, then the market itself is going to be well supported by the China companies. So that's going to be the potential threat.
Okay. In your research, I'm going to read this out for our viewers. You point out that so it's 11%, as you mentioned. 15% share is the floor for long-term survival. And I think that goes to the very core of maybe something that is not getting too much attention, but I think it's important right now. Why 15%? And are we assuming too high a probability of success in terms of the company, just to look at that other side of the risk there?
That's a good point. There is no magic number, but however, The reason why I say 15% is that it's from the lesson from the past. So I believe that CXMT is based on the two lessons from the past. One is previous DRAM venture in China, which has been against Micron in terms of intellectual property. That has been not going well. Another one is a case of Taiwan memories in 2028 and 2029. The meaning of the 15% is the scale to sufficiently generate enough operating cash flow to spend in the future capital spending. So if you don't have the scale, you need to rely on either debt or subsidies or any other measure to withstand the downturn. That is not sustainable. That's why I believe that CXMT is going to continue to expand until it becomes more self-cash flow generating company.
MS, we got to leave it there, but thank you so much. MS Hwang there, Research Director at Counterpoint. He brings in, of course, 3 decades of experience working at Samsung, also on the sell side as well. So appreciate your insights there, sir. Let's talk about another upcoming IPO as well. We're talking about Shein here. The fast fashion retailer has revealed softening profitability and slower revenue growth as it offered investors the first detailed look at its finances ahead of that planned IPO in Hong Kong. Let's get more now on that story with our ECM reporter, Dave Sebastian. So the earnings side of things still looks like things are pretty soft. How much pressure does this add to the valuation now?
Yeah, so we're about to see this deal come to fruition after years of waiting. I mean, it's it sought to list in New York and Europe as well, and now we're about to see it come to list in Hong Kong. So the numbers that were disclosed yesterday in this PHIP, it showed some slowing growth as well as profit. So these are the numbers that investors would need to work with as they assess this company in the coming weeks. So we'll have to see how that goes. For now, what we know is that it's aiming to raise $2 to $3 billion in its IPO, but that's also that's subject to the feedback from investors as well.
Okay, August. Do we know more on the timing?
Somewhere in August. That's that's what we know so far.
Okay.
It's somewhere in August. But yeah, I mean, it's come quite a long way because it's faced various challenges, including tariff pressures in the U.S. as well as its competition with Temu, and also various geopolitical pressures as well. So we'll have to see how all of that sort of comes to fruition in a few weeks.
Yep. Well, at least to your point, right? The numbers are now out, and investors now have something more tangible to latch on to. Dave Sebastian there, our ECM reporter. So just to put the numbers there, so last year's profit, $2 billion. It's down from about $3.4 billion in 2024. So the course of travel, maybe not that good. So obviously we'll have to wait and see about details, how the amount of money, and of course the actual date of listing here.
Okay. Well, certainly that's one thing to watch here, especially given that this is interesting, right? It's going to be an IPO in the consumer space at a time when AI has been very volatile and very choppy and really a lot of momentum behind it still. Take a look at CXMT as a clear example of that as well. We're taking a look at Asian markets as we head to that break here, and with CXMT, we're coming off the highs. So we're still talking about 342% gains, mind you. But CSI 300, we are seeing a bit of an offset here. We're lower by about 1/5 of 1%. MSCI China, Hong Kong, though, still above a water there. This is Bloomberg. Well, if you've been catching up with what's been going on in social media, NVIDIA and its CEO, Jensen Huang, have been caught up when it comes to growing tensions between the U.S. and China when it comes to AI. A lot about this open source sort of debate, which we'll talk a bit more about later. But he did speak exclusively to Bloomberg about where he sees the future of AI development in both countries.
The goal of AI is to produce an intelligent, a smart answer. Now, you could approach it in a couple of different ways. You could, of course, make all of the tokens smarter and smarter, and as a result in using less tokens to do so. You could also produce AIs that are much more efficient, and maybe you can think longer, explore more options, and as a result produce a smart answer. There are many different ways to reach intelligence and deliver smart answers. In the end, really, I think you have to take a step back and just realize that both countries has extraordinary AI researchers, and whatever conditions and whatever resources that they have, amazing people will find great answers. And so my expectation is that China and the United States will continue to advance AI. The conditions are different, the resources are different, their constraints are different, but these amazing researchers will find answers. And I think that in the case of China, they're producing more AI researchers than probably all of the world has, in any given year. And so they're producing, if manufacturing intelligence is important, they manufacture the most important version of it, which is the researchers. And so this is an area, a country that's going to produce excellent AI technology. We ought to continue to learn from them, work with them. As you know, you're here in Silicon Valley, right here in San Francisco. The number of AI researchers here that came from China that are Chinese is really quite significant. And so, we're really fortunate to have them here, and we just got to keep on racing.
You made your first post on X.
I did.
And you did so by sharing a letter signed by many of your peers, American companies, to talk about the importance of open models to America, to the industry, to the development of AI. And in the letter, it's pretty well explained, your rationale. But what was the catalyst for now? Why did you and Satya Nadella and others need to do that in this moment? Well,
we sense that there's a growing sentiment that and the wrong sentiment for open models. It's really important to realize that open models is essential for safety. Open models is essential for security, for cybersecurity. Open models are essential for innovation. It's necessary for startups. It's necessary for sovereignty, company sovereignty. I see a future where the world uses tons of closed models. And I encourage everybody, including my company, to use OpenAI and Claude and Cursor and Cognition and Perplexity. Use everything that you can because it's out of the cloud, because it's just easier. And you build only what you must. And so in order to build what you must, you need to have open models to do that with. And the areas where we must, maybe it's because we have expertise that we simply cannot afford to share. This is our company's alpha, our company's intelligence, and we have to make sure we keep that proprietary. Maybe it's because our company works in an industry that's regulated, and therefore we simply can't pass along the service level agreement, and we have to make sure that we can deliver fully on the service and the promise that we sign up for. Maybe it's something to do with sovereignty that you simply, in a particular country, you have to have your own AI. You have to control your own AI. Whatever those reasons are, it could be cost reasons, but I think that largely I would recommend people build their own AIs, especially when they need to control it for whatever reason.
Yeah, and I think as Jensen Huang there and our colleague Ed Ludlow had more than alluded to, right? The very first post really sparked almost this accord, this philosophical debate that has been really raging underneath the hood here, and I think it was really out in the open on social media. You had, of course, a lot of people who were reposting in the industry, not just random people reposting from the industry, reposting Jensen Huang's post there in support. But on the other side of it, of course, you did have, of course, others like Anthropic, the staffer, of course, Julian Schutzweiser, effectively putting a dose of sarcasm here on the back of what they were calling for.
Yeah, so you have the camps, right? The Anthropic and OpenAIs, which claim that maybe some of these Chinese AI models are maybe dangerous to be developed in the open. There must be more regulation. And then you have the likes of Jensen Huang and Microsoft Satya Nadella, who basically says, look, open source is certainly the way to go there, essential to a healthy AI ecosystem, according to Satya Nadella. Because, the likes of NVIDIA and likes of Microsoft, they certainly need that open source sort of model to help spur demand when it comes to some of their cloud services and the like, right? So certainly you see why there is this kind of growing divide within the tech industry about whether these Chinese AI models should be incorporated or not to the U.S. as well. So I think, and also Scott Besson came in and kind of chimed in on all this as well, talking about maybe there needs to be more regulation. Whether it's because of national security risks, this could be one issue, but there's a lot of debate whether, are they actually even considering like a blanket ban right now as well? And it seems like a lot
on Chinese models specifically.
On Chinese models specifically.
Chinese
here.
labs,
so then we'll see how that plays out in terms of the regulatory side of things too.
Okay, well, watch this space.
Yeah.
If you can, if it remains open. I get just so confused, open source and open weight. That's another altogether. With lots more ahead here on The China Show. Right, just an update. About 24 minutes into being a public company, CXMT is up. We're kind of off highs of the day at 430%. But suffice to say, it's been a fantastic trading debut. Obviously, looking at most, if not all, indicators, we were going to get a blockbuster of an open today. Currently, we are set. CXMT is set to become the largest listed company in mainland China by market cap, by current valuations. We have lots more ahead here on The China Show.
Our house view, based on our tech team's work, is that there is still a meaningful gap between what the front end Chinese capabilities are on semiconductors and what the Korean and Taiwanese and the US capabilities are.
I think what's really going well for China is government is hugely supportive, and we're going to see companies that are worthy of going public go public and raise the money they need to deliver their business goals. And we're also seeing phenomenal consumer and enterprise enthusiasm about AI.
Yeah, some of our guests there on the outlook when it comes to, of course, Chinese chips and the broader AI sector here and what to really look out for the next coming few days or weeks or months when it comes to CXMT. Welcome back to the China Show. A look at, of course, that stock here now, looks set to be mainland China's largest listed company if we continue to see these punchy gains north of 450%, Dave.
And if Nomura is correct, we're going to get it's going to go up another $60, give or take, looking at their price target. So the sell side's still coming in and populating their data sets. And
very bullish.
Very bullish, suffice to say. That was from $8, right? So I think we've gone halfway now, 460% on the company itself. Now, this is obviously going to be front and center for coverage today, but it's also having sort of second-order effects across different markets. So we've gone from initially the liquidity shock to maybe what we're seeing across some of the already listed companies here today because of, I guess, this rush back into the company. CSI 300 about 0.4% to the upside. Flip the page. MSCI China is also up about 0.5% in the early goings. It's not as pretty when you look in other parts of the region with the Kospi down about 0.7%. Finally, a normal day. I don't think I've seen the Kospi move by this little in as far as I can remember. And interesting how my memory has failed me, if you got the pun. Taiwan is down about 0.6%. Topics index 9. I think we got PPI prices, PPI inflation out of Japan. We also have the BOJ, by the way, also coming out this week, just to mark that milestone.
And the Fed meets this week.
Oh, that's right.
We haven't even talked about the macro picture here, right? The inflation volatility, as some have been talking about here. And there is still maybe some possibility of a very hawkish People are still talking maybe, this meeting could be live in some ways.
33% probability.
Yes, it's nothing. It's not nothing, is what I was going to say. But yes, as you say, Kospi is just marginally lower here. That liquidity shock certainly from CXMT, we could be feeling that here today. We're checking Indo assets because what was pretty much breaking news and a bit of a surprise to the market too in some ways was that the Bank Indonesia Governor Warjiyo unexpectedly resigns here earlier and citing personal reasons here. You're seeing not much reaction in the rupiah, so to speak, but certainly he has been seen for years now as that steady hand when it comes to, of course, the governor of the bank there,
especially recently, stabilizing assets.
Exactly. Yeah. So Indo assets slightly under pressure. I mean, the JCI is slightly down, but not by much in some ways. But we're also watching Singapore there, MAS tightening policy here, just given, of course, those inflation concerns out there. Not much reaction, really, but some strength crossing through to the Sing dollar here this morning.
Yeah, there we go. Oil prices, the yields are down. The dollar's also on the weaker side of things. We look at oil prices. Of course, we'll get into the Iran story a bit later on. But yes, so we have pulled back from the triple-digit handle we had last week. It certainly does help that they've, at least for now, stopped shooting at each other. Okay, let's take it back to the broader story across the tech space. And despite, of course, some pretty sideways markets right now at an index level, there has been a lot of churn underneath the hood. Tech trading getting more differentiated, more nuanced. This dynamic's likely to pick up really with new names. And we're trying to figure out who the next big winners are, really. Anthony Stephens is here with us, our markets reporter, to talk us through what's this churn that we're not really seeing underneath the hood.
Yeah, well,
most people.
New week, same problems, right? You're trying to understand where the kind of bottlenecks are and if there are bottlenecks. So that's the next level here. Now, we've gone from the bottlenecks trade being the number one driver of equity markets to will these bottlenecks hold, right? And that's the context in which CXMT is raising this money. Where does the extra China capital raising result in new capacity that dents some of these stocks, changes them back into cyclicals from this kind of structural rally that they were looking at? So you saw that very much a case in the Friday session in the US where the top leaders of the year started to fall very sharply. And that happened despite pretty strong numbers from Intel. Intel in our time zone was up like 3, 4, 5% and it closed down 7%. And this is the kind of intraday volatility that you're seeing in these kind of bottleneck trades. You're seeing that again today in Taiwan and Japan, where the CXMT listing has been kind of greeted by a sign that the Chinese are kind of powering up for another round of supply. So what names are really cyclical versus what names are really structural, that sets up the debate for the rest of the week. And we will get a lot of guidance on that from all the earnings that are coming out this week.
Yeah, what's going to be top of mind for you in terms of the earnings side of things?
We're going to be talking about hyperscaler capex and supplier capex. So there are two capex stories here, right? One is the capex story of the hyperscalers spending money to get compute, and then all these companies trying to build out new capacity to address that compute, and how much of that is rational. That is why we have this debate around circular financing with NVIDIA being so fervent, because that determines the follow-through demand from NVIDIA and all the people that play in its ecosystem.
All right, Anthony Stephens there, our Bloomberg Markets reporter, on what to watch out for here this week. And still, we're watching CXMT, right? How is that really kind of impacting the rest of the dynamics of this market? You're starting to see, as you say, it maybe is adding to that sort of, I guess you could say, diversion or dispersion across the tech space as well. 453% gains.
Well, diversion
right
of attention,
now.
Really.
Yeah. I mean, that's the only thing we can talk about here right now. $9.8 billion raised in the second largest IPO in China's history. Let's bring in our Asia Equity Capital Markets reporter, Julia Ferretti, joining us here on just the significance of this debut.
It's hard to overstate it. Basically, it's obviously China's largest IPO in history. It's a homegrown tech champion for China, and so it's a key player in the rivalry between the US and China for global tech dominance. And as the world's fourth largest maker of DRAM, basically it's a key hope for Beijing to reduce its dependence on foreign suppliers. And so it's the latest deal that we've seen in the whole memory space. Obviously, there's been a global shortage of chips, which has pushed up prices to unprecedented levels. And so this IPO and the funds that it's raising comes at a hugely significant time in that, and also at a time when we're seeing investors wobble a little bit on some of the valuations that we've seen in the sector.
Yeah, and this one was really priced at a discount to what most of the things we could measure it against in the primary markets. I mean, it is listed right now, but just to get a sense of how much more runway short-term the stock has, talk to us about the pricing dynamics that went into this. It's an onshore listing, which plays a lot into how not inflated some of the valuations were.
And how foreign investors still can get
they can get access to this.
Yeah.
I mean, that depends on the Stock Connect too, and when they get into this, and also the free float of the company. Talk to us about those things too.
So yes, it was priced at a pretty cheap value, basically. The IPO price valued it at 2.4 times book value, which is more than a 50% discount to peers such as SK Hynix and Micron. So obviously there's a lot of runway there, and even now that it's obviously jumped almost 500%, it's still there's still a lot of potential upside according to investors. Also because foreign investors don't really have access to this at the moment. And given how significant it is, there's expected to be state buying as well. So, and also many analysts see that its earnings could continue to grow. It reported 8-fold growth in revenue in the first quarter, and there's still a lot of runway. People don't think that the memory chip shortage is going to end anytime soon. So there's definitely a lot of, and obviously, onshore IPOs tend to be priced at cheaper valuations than maybe the market would normally determine.
We're also watching for a big listing in Hong Kong, InnoLight as well. Tell us a bit more about what we know at this point. Where are we in the whole process?
So InnoLight is another story in the whole AI supply chain, AI hardware. It makes optical transceivers, so those are key for data centers. So it's seen a huge growth, huge surge in its onshore, in its share price in Shenzhen. And so the expectations are that it will do well. Obviously, it comes after such a high growth, and that has been a little bit of a wobble in Hong Kong in the performance of Hong Kong IPOs recently. So investors will be we're looking for a discount, a decent discount. But given the significance of this at $7 billion, at least $7 billion, it's likely to be. There's a lot hinges on it doing well in terms of both for the Hong Kong IPO market and for the whole AI story in general.
Okay. We have one to watch on a Monday, and of course, as we go into the latter part of the week, another one, of course, that hits markets here, specifically in Hong Kong, on the latter bit. Right, Julia, thank you so much. Julia Ferretti there, our reporter, just to talk us through the big ones we're tracking today. Okay, speaking of diversion of attention, we have almost yet to talk about the other bit, which would have been otherwise our top story today, CATL, massive results, massive buyback that are coming out of the company. So we'll talk about this in a few moments. And later on, we speak with a bit of wellness, a touch of wellness on our shows today. Things like skincare, targeting the Chinese market. So we'll have, of course, the CEO coming through, Boiron coming through there. So stay tuned for those conversations coming up on those times, on your screens. Lots more ahead, suffice to say. This is The China Show.
The longer-term story, as you can see with all the buy ratings, ourselves included, is very good. I think there's very little doubt about how strong the position of CATL is for a long-term investor. It's just there's all this near-term noise around the costs, around the demand picture in the near term that's getting people a bit of pause, especially after how well the shares did after the Q1 print.
That was Macquarie Capital's head of China equity strategy, Eugene Shihao, on, of course, the attractiveness of CATL, speaking to us ahead of that earnings as well. The world's largest EV battery maker posted that 42% increase in first half profit, benefiting from robust demand for energy storage systems, or ESS. Revenue also rose 55%, and EV batteries still account for most of CATL's profits, but energy storage, as you can see, is becoming that growing contributor to their results. The company also was a bit of surprise, planning to buy back A shares worth 20 to 40 billion RMB, and I think Goldman Sachs came out saying, I think that is a record in the A share market, Dave.
Yeah, in terms of the direct return to shareholders, right, on that specific corporate action. So, I mean, and the company has certainly continued to leverage on the technology front, its cell technology, on manufacturing, its scale. And you do have, of course, producers across China and this race to capture a share of the global energy boom. Energy storage, we talked about this ESS, right, is really a key part to China's multi-trillion-dollar AI infrastructure push. And really, CATL perhaps at the very center of that specific push there. Ming Li, head of Greater China Automotive and Industrials Research at BofA Global Research, joining us right now to talk us through this sort of longer-term plan. Ming Li, good morning, and thanks for taking the time to speak with us. I think before we take a step back and look at how central the company perhaps is to the broader infrastructure build-out, What do you just make of the company's financials, and especially the buyback?
Sure, I believe that overall the energy storage system demand is still strong, and I think during the earnings call, management also remain a positive and confident view for the next few years demand. And in terms of the AI infrastructure related, especially on the AIDC, I think right now its overall demand probably only account for less than 5% of CATL's energy storage demand now. So it's just beginning, and we expect to see more contribution for the whole battery industry in the next few years.
Yeah, ESS, right? It seems like you're hearing a lot more of this as a way to offset slowing EV sales in China. Mainly, where do you see the runway on this in terms of ESS? How big of a contributor could it be for CATL's growth moving forward?
I think this year ESS contribution already reached 25% of its revenue, and profit-wise is higher than that. And we expect in the next 3 to 5 years, ESS could contribute more, roughly 40% of its revenue. On the other hand, for the power battery or EV battery, although the passenger EV in China slowed down, but China's overall EV export remain pretty strong. We expect China EV export to grow more than 100% year over year in 2026. Besides that, commercial vehicle and also the construction machinery electrification is continuing, and we believe commercial vehicle will gradually catch up passenger EVs penetration.
How long do you think that's going to take, the commercial EV space, in as far as being at par with private vehicles?
Yes, this year, China's passenger EVs penetration has reached 60% for new car sales. On the other hand, commercial vehicles electrification is only around 30% in 2026. So we believe in 4 to 5 years, CV's electrification could reach around 50%. So I think it will catch up pretty fast. Besides that, the battery pack size for commercial vehicle is way bigger than passenger vehicle. So actually, the growth is even higher than that.
I mean, certainly there's been a lot of questions about raw materials and volatility that we're seeing with prices and the like. Do you think the fundamentals and what you're seeing in the industry right now, does that in any way offset some of those margin concerns?
Yes, I think this year, in second quarter, raw material price should be relatively high. But on the other hand, in second half this year, with more supply on the lithium and also other raw material, we believe the raw material price could be more stable in the second half. So I think this should be positive for battery makers' gross margin in second half.
And just your outlook on battery prices, given we just talked about input prices. And I know you covered the industry, so I just want to get a sense, too, of how that cost component looks for OEMs, for example, that do have to consider this cost of input.
Yes, I think year to date, on the average for a passenger EV, if it's a pure battery EV, then on the average, the cost per car increased by around 5,000 RMB per car. So the cost inflation is actually quite high for EVs. And on the other hand, I think even for a plug-in hybrid EV, because the battery pack size is smaller, therefore the cost inflation is also around 2,000 to 3,000 RMB per car year to date.
What can you tell us about just overall the EV sector right now? I mean, I know you mentioned that you still expect exports to be quite strong this year. Are we likely to see, for some of the earnings reports of some of these automakers, are exports likely to really be the key driver to really offset the slowdown in the domestic industry?
Yes, I think this year several auto companies such as BYD, Geely, XPeng, etc. I think their overall EV export volume is better than the guidance. Therefore, we believe the overall profitability should be supported by the overseas business because currently the overseas profitability is still way better than the Chinese local markets EV profitability.
And just looking at this from a global perspective, obviously you have, just to mention two names in China on batteries, you have CATL, you have BYD, you have Panasonic, you have LG Energy Solutions. What are you watching in as far as potential or coming technology breakthroughs that could change, the advantage in one way or the other here?
Yes, I think currently Chinese company, they are working very hard on the two new technology. One is solid-state battery, which we expect for the full solid-state battery to be commercialized in second half next year, but just in a relatively small batch because currently the cost is still pretty high. On the other hand, another technology is the sodium-ion battery. I think this is very important because actually including CATL and also other battery makers, they expect in the future among the energy storage system battery, sodium-ion battery could become more significant contribution for the overall batteries. And I think this can more or less mitigate the rising costs from the lithium battery side. Yeah, so sodium-ion battery is pretty important. And even recently, China government just announced to increase the battery consumption tax. But sodium-ion battery and the solid-state battery, they are on the web list until the end of 2028.
Is there a world where you see sodium-ion replacing lithium?
I think partially. We expect for some leading battery companies, sodium battery could contribute at least 20 to 30% of the total energy storage battery revenue. So I think in next 3 to 4 years, sodium-ion battery will become more important.
All right, Ming, we're going to leave it there. Head of Greater China Automotive and Industrials Research at BofA Global Research. Coming up, we'll speak to the CEO of wellness and skincare company Boiron about their Asia expansion plans and why China is a key growth market for them. We have plenty more coming up on the China Show. This is Bloomberg. All right, in some corporate news this morning, DeepSeek is set to put its latest fundraising plans on hold for now. Bloomberg sources say founder Liang Wenfen is frustrated over online posts by Chinese media about comments attributed to him from a June funding round. The reports, based on an unverified transcript, say the billionaire founder discussed a reliance on NVIDIA chips and China's lag in AI relative to the U.S. Shein has revealed softening profitability and softer revenue growth as it offered the first detailed look at its finances ahead of a planned Hong Kong IPO. The company posted a loss of $99 million in the first 3 months of 2026 versus $395 million profit a year earlier. Shein won approval for a Hong Kong listing after failed attempts in both New York and London. Chinese regulators have fined Trip.com $765 million for abusing its market dominance. The investigation found the company employed monopolistic practices, restricting hotel operators' cross-platform operations and infringing on their right to set their own prices. Trip.com says it accepts the decision and will firmly obey it. Stock up some 5% this morning.
Yeah, this really has been one of the clouds of uncertainty over the stock, and perhaps that is removed with this resolution. as far as this specific item is concerned. Yeah, I just said check on CXMT in case you're curious. I believe there should be session highs right now, 470%. So we have climbed back to, after dipping below that 400% handle earlier on. Some of the related names, of course, are seeing some pressure across. These are some of the Hong Kong and mainland Chinese listings, like Moore Threads. And I should mention Moore Threads was actually, I think, within the top 5 or 6 best trading debuts, just to mention that. 470%. Okay, Naver, SK Hynix, and the Kospi Index. This is the NVIDIA report on investing about $1 billion into, of course, further into its supply chain and partners there as far as that's concerned, this accord. Very quickly, we're looking at oil and energy-related stocks as we have pulled back, of course, in terms of oil prices. Shanghai crude's down 6%. We're down about 4 to 5% on Brent prices as, I guess, the two sides, U.S. and Iran, have, at least for now, stopped shooting at one another. PetroChina's down about 3%. Lots more ahead. This is The China Show.
All right, 11:29 a.m. in Tokyo. Japanese markets are going on a break in just a moment. And yes, we're actually seeing a 163 handle for $-yen here this morning, although there is some strength coming through. But we are seeing some decent gains across the topics here this morning. We're punching about 1% there. Nikkei is also seeing a slight bid there. Certainly one thing to watch very closely is, of course, where we are in this whole tech sort of trade here, given what we saw from, the chip space on Friday. Intel reported, and then, it just got pretty ugly. But right now, things are looking a little bit better in Tokyo, at least.
Yeah, I mean, you missed it. So
I did.
$-yen, just when we thought 161.50 was the intervention level, and suddenly I woke up one morning 163, and then it got, I believe, to 164 too.
Yeah, I'm like, it's strengthening to 163. That shocked me a little bit.
Which is a very strange headline. But yes, such is the world we're in, and this comes together in a very nice way this week because you do have the BOJ and you have the Fed coming through this week. So the rate differential story is going to be, I think, we're going to have a lot more meat on those two specific sides of that bone. Okay, so we're up on the topics about one. Asia's better by 0.4%. It's largely outside of tech, CMT, and some of the more nuanced trades there. And we've talked at length about CXMT. It's actually very quiet. I think the other standout sector today is this pullback we're seeing across energy names. We're down 1.6% on the regional subgauge, really on the back of, which is certainly good news, this pullback in oil prices globally on the back of the pullback and retreat we're seeing from both sides and them not shooting at each other currently. We're up 0.6 of 1% on S&P futures here.
Yeah, time to talk about alternative medicine. Why not, right? Let's talk about Paris-listed Boiron is a developer and manufacturer of homeopathic medicines. The company has been expanding into wellness and dermal cosmetics and looking to Asia for a source of growth, especially when it comes to mainland China. Joining us exclusively now is the Boiron CEO, Pascal Houdayer. Pascal, it's great to have you here in the region. Yvonne. I understand you have to brave this typhoon to get here, so thank you so much for doing that. But it's interesting, this strategic sort of pivot you're doing for the business here right now. Tell us how you're redefining, really, the core business now for Boiron.
So thanks a lot for the invitation. When we look at Asia for us, it's one of the fastest growing business for Boiron, and we are specifically focusing on China with two different strategies. On the first hand, everything which is about mom and baby skincare. And second, expansion into the food supplements or the vitamin mineral supplements in the future.
Okay, well, talk to us about the China bit, then we can talk about the rest of the region, because you're, of course, your center of operations there is Hangzhou. Talk to us about your plans and where you would like to see that specific part of the business there.
Yeah, so we started operation in Hangzhou in 2025, hired 60 people, and started to launch, many brands. First, Cica Derma in skincare, second, Calendula cream, and also Arni Gel, which is for joint pain. We had fantastic results in year one, mainly through social media and mainly through social commerce, not e-commerce. Our number one customer is Douyin, and we are having in our office, some people selling face to camera directly and no presence in brick and mortar.
And how is that business model working out? Is that the way to go in China, in your specific
I believe that the way to go is indeed e-commerce. It started by pure player. We started in Tmall, cross-border. Then we created our legal entity locally. Now we're in social commerce, and the future, you know what, is called AI commerce.
Ah. Okay, so not real people?
No,
doing
real people buying, but at the end of the day, being influenced by people and machines.
Interesting.
How does your products and the like, how do you sell that in China? I mean, obviously, traditional Chinese medicine has such a cultural significance in the mainland, here in Hong Kong and the like as well. I mean, is it compete with TCM, or do you think somewhat they're related?
First of all, we are not selling homeopathic medicine in China yet.
Okay.
This is something that we want to do for the long term. Second, on your question, Yvonne, it's not competing. It's actually the same philosophy. Because when you look at homeopathy, basically it's derived mainly from botanical, from plants, and basically, working on the holisticity of a person, not only on the problem, but actually on everything, so that the people are good quality of life and in good balance.
You're competing, though, for share of pocket, even if it's not competing directly. And so I think that goes into things like pricing and marketing. And how do you think about that as far as your products go?
Share of pocket, it's very relative. We are focused in China on skincare, and we see actually the market evolving super well. The Chinese consumers are very demanding. They are waiting for authenticity, science-based, and something that goes along with longevity. Good news. Boiron, we are a pharmaceutical laboratory with 100% of our product made in France. So we bring the best of a pharmaceutical lab to the Chinese consumer while giving also some scientific background. So it's not too much about share of pocket, it's about share of mind.
I like the way you put that.
Yeah, I was looking at your contribution. China is your largest Asian market, but it's still a small fraction of your group revenue.
True.
Do you have a target in the next 5 years of what revenue could look like in this market?
We move from zero to have China becoming our 5th global market out of 50.
Wow.
We believe that China can become, either number 2 or number 3 market, behind France, which is our biggest home market, and the US. So we have a lot of hopes, and we will invest in the market for the future.
You mentioned the product line that you're not yet selling homeopathic treatment. Do you have a timeline of when you plan to introduce that, just in terms of your product lineup in your now 5th biggest market?
If you look at our where-to-play choice in terms of strategy number 1 is to enlarge our skincare business for mom and baby. Strategy number 2 is to launch for China first and Pan-Asia second a line of food supplements, and third, to introduce homeopathic medicine. Takes a bit of time because we need to register with the Ministry of Health. That's why it's our 3rd strategy.
I think most of your production is still in Europe. Given just the threat of tariffs, and obviously there's been some regulatory threats when it comes to Trump and in the pharma industry and generic drugs and the like, are you looking at localizing production in any way? What sort of plans do you have on that front?
First of all, we believe that for homeopathic products and also for skincare products, the vast majority will remain made in France for the reason that I explained before of credibility, scientific background, etc. When you look at food supplements, a lot of the credibility for the Chinese consumer are linked to local ingredients. And therefore, we're going to look for that, maybe to produce in Asia, closer actually to the end consumer, which has also a benefit from a sustainability standpoint, which is important for our company.
There's been an extremely well-documented growth in wellness trends globally. Food supplements is, I would say, even parts very central to this. How have you seen that affect the demand for your products?
You're right, David. It's one of the biggest global trends. Food supplements is 200 million globally, growing 8%. 200 billion, sorry. And in China, it's already 25 to 30 billion, growing double digit. So China is growing faster than the market. The key trend that we are seeing is longevity. Longevity defined not only as living longer, lifespan, living longer, healthy, health span, but living longer, healthy with joy, joy span. which is very important.
Yeah.
So that's basically what we're focusing on. Longevity and joy span, which fits the DNA of Boiron.
You're also going to be in the region traveling. You told us a little bit in the break here. Tell us about the rest of the region and what sort of markets excite you right now. What sort of partnerships are you looking to line up?
We are present in 4 to 5 markets in the region, and we are looking at developing, new markets. And we believe that leveraging the food supplement trend, which is really exploding in the region, will be a way for us to accelerate.
Tell us more.
Which markets?
What are those? Yeah. What are those markets that are now
the usual suspects?
Okay.
The usual suspects are the one with, the biggest population, upper middle class, with affordable, purchasing power. So we're looking at Indonesia, Thailand, Vietnam, and depending on what we can do, we're going to have a sequence in these markets.
Homeopathy is big in India.
True.
How are you looking at that market?
Actually, Boiron was in India historically. But we decided to exit India because actually, even if it's a big homeopathic market, it's not the most profitable. So we had to make some choices.
Yeah, I think you're looking to expand in Korea as well. I mean, obviously there's K-beauty there, which is massive, right? What are sort of the barriers to entry you think?
That's going to be
competitively.
We do have already a presence in Korea with a distributor who are selling mainly Arnigel, which is our cream for pain and joints, etc. Korea is big in terms of cosmetic. So China, Korea, Japan, they are huge untapped potential markets for us, and we are looking at all of them.
Okay.
Without disclosing everything.
We wait for the details forthcoming.
Yes.
Next time you're back in town.
David needs some face cream.
Yes, I have a really bad case of eczema.
Pascal can help us with that.
Yes. E, not for excellence, eczema.
Pascal Houdayer, thank you, CEO at Boiron, joining us here in Hong Kong. Of course, you can rewatch that interview on our Bloomberg Video Hub. Subscribers can explore live streams and our news and interviews there. Check it out at bloomberg.com/videos. This is Bloomberg. All right, we're keeping an eye on the Indonesia rupiah here this morning after that surprise news this morning. Bank Indonesia Governor Warjiyo resigned 2 years ahead of his term expiring. Let's bring in our Jakarta Bureau Chief, Ben Otto. He's been following the story and joins us now. Also with us is our Bloomberg MI strategist, Andre De Silva. He's been covering EM for decades. Let's bring in Ben first. Ben, I mean, a lot of us woke up to this in a bit of surprise. What happened?
Yeah, good morning. It was a surprise. Details are thin, but we all woke up in a scramble when Bank Indonesia called a press conference for 7:30 a.m. No one quite knew what it was about. But that's what was announced. Warjiyo has submitted his resignation for stated health or personal reasons. Submitted the resignation to the president over the weekend, and it was accepted. And the city is trying to make sense of it right now. He was, like you said, 2 years. He had 2 years left on his term, and he's been widely regarded as a capable hand of the bank. And this was a surprise. Yes.
Yeah. Question for both of you, but Otto, let me just put the question to you first. How is this being viewed locally in markets right now?
So markets are trying to make sense of it and trying to determine whether it fits into a narrative of Bank Indonesia developing less independence under the Prabowo Subianto administration. We haven't heard from Warjiyo, but generally we know that Bank Indonesia has been under pressure since Prabowo started up in October 2024 to help boost economic growth. He has a very ambitious growth goal to, by the end of his term, raise economic growth to closer to 8%, something that Indonesia hasn't seen in decades, from 5% right now. And we know that Warjiyo was more or less on board with that. He promised last year, he promised monetary policy would be all out pro-growth. That said, we've seen increasing pressure on Bank Indonesia, and the market has been watching that very closely. Parliament passed a law recently that expands the central bank's mandate to include real sector growth and job creation. It also subjected the bank to performance evaluations. So there's a sense that the independence wasn't perhaps not being eroded exactly, but changed. This morning, interestingly enough, a economic affairs expert published a lengthy column in local media that made the case for a central bank that was more aligned with the bank. And he pointed to closer coordination between central banks and governments in countries like Singapore, China, Japan, China. So the market is trying to evaluate right now. The rupiah is a little bit weaker, still hovering near that all-time low. And the stock market is just a little bit down, but not as fazed by it as you might have imagined a couple hours ago.
Andre, when you saw the headline this morning, what came through your mind? And how much pressure could this have on the rupiah?
Well, the first thing, what the actual comments were going to be, because they're not scheduled clearly. First of all, I'd take a step back. I'd say I wish Pak Perry very well. I've met him many occasions over the past. But going to the markets, I think that, as already stated earlier, it's that continuity that matters. It's not just that his term has expired early, prematurely, by just under 2 years. He's been there for over 8 years. So this is a second term of office, and at a time when a lot of EM central banks and FX are under pressure, and there's been a little bit of inroads in the rupiah in terms of policy. We've had inflows in the foreign bond market. We've had 100 basis point tightening by the central bank governor. So the question is, who takes the next stages on, and whether that credibility gets maintained. We know that the Deputy Governor Destry is there, but we get the appointment of the permanent one, and that's the question mark. So it's not great time-wise, considering where we are in terms of the Middle East and oil prices.
And, Andre, the fact that we're trading slightly weaker in spot, and I think, as you point out, in the forward market, do you think that will continue to remain the case until we get clarity on who will eventually succeed?
I believe so, and you're absolutely right. So you look at the one-month NDFs, they've already tested the 18,000, those key levels. Again, it's not that dramatic, but it's that direction that matters more. And again, it's unfortunate because it was outperforming the Philippine peso, outperforming the rupee, so it was making inroads. But I think that the market will wait to not only just about continuity in terms of the deputy governor, but ultimately who's going to take over. And that procedure, as already mentioned earlier, will be up to the president, and then appointed by or nominated in terms of approval of the government, and that will take some time. So there'll be additional premium as a consequence of that.
Okay. Gents, thank you so much. Fantastic, of course, our initial take there here on Bloomberg on clearly very unexpected news coming through out of Indonesia today. Our Jakarta Bureau Chief, Ben Otto, in Jakarta for us, and Andre De Silva, our MLive strategist here on set with us here in Hong Kong. Just a glance at cash markets in Greater China. To the upside, 1.5%. We're led by Hang Seng Tech. Of course, there is one big story in town, CXMT. We'll have more on that in a moment. This is Bloomberg.
The leader of India's youth protest movement is promising further action after forcing the resignation of the education minister. And it's the first time since Prime Minister Narendra Modi took power in 2014 that one of his ministers has resigned under public pressure. Let's bring in our South Asia economy editor, Ruchi Bhatia, joins us now from New Delhi. Ruchi, it's great to have you. I mean, obviously, these protests began about a month ago and really has quickly escalated. Tell us more about the fallout, really, and what more to come.
So absolutely. I mean, the government had not anticipated that the student movement is going to turn into something like this. Last week on Monday, we saw protesters on the streets, in fact, marching towards the parliament, so much so that the government had to resort to the usage of tear gas and batons. And that is when there was a lot of outpour and the calls for the resignation of the education minister really escalated. And which is why on Saturday we saw the education minister minister really stepping down. I mean, so to say, if you look at it, this is a major climb down for the Modi government because the Prime Minister had to listen to the voice of the young people who are clearly disillusioned with India's education system, as well as problems like the lack of jobs. Having said that, as I said, it's a major climb down for Prime Minister Narendra Modi. He had to make a retreat, so to say, from his stated position because until now we've not seen a cabinet minister in the last 12 years stepping down because of public pressure. This government usually does not respond to public pressure in this way, and public calls for resignation. Having said that, in the past we've seen the Modi government cutting their losses fairly quickly because a couple of years ago when the government wanted to bring in the farm laws and there were a lot of protests from the farming community, which is Prime Minister Narendra Modi's one of his biggest constituencies, the government had to repeal the farm laws. Similarly, in this case, the government had to ask the education minister to step down. So in that sense, as I said, this has really, in that sense, punctured the aura of invincibility, has left the Prime Minister sort of vulnerable as well after these student protests. Of course, there are questions on what the student-led body, that was the Cockroach Janata Party, will really do from here on, and that is something that we will have to wait and watch out for.
Yeah, as you say, it is a blow to the Modi brand. What's next for the parliament? Because I know there's a key election coming up too.
Oh, absolutely. As far as the parliament is concerned, the whole of last week was a sort of a washout. The government could not pursue any legislative agenda. But come Monday, remember the last 2 to 3 days, we've seen the Prime Minister, in fact, also coming in and talking about how youth are very important for the country. So come Monday, there is going to be an anti-paper leak bill that will be brought forth in the parliament. On Sunday, Prime Minister Modi said that he has chaired a high-level task force that will be led by Nandan Nilekani. He is seen as somebody who has really pushed forth the government's digital infrastructure as well. So his expertise will be used to plug these big lapses in the education system. And hopefully these are some of the things that the government will now talk about, that how quickly they moved in to kind of contain the fallout of this whole protest in the parliament as well, is something that we are expecting. Having said that, I have to also mention that the Cockroach Janata Party has also said that they will continue their movement in other states. They will take up issues that resonate with the youth. So this is something that one really has to watch out for as to the what shape and form it will take in the coming months.
Ruchi, thank you so much. I mean, it's something certainly we'll be keeping an eye on a lot more, certainly given what has just taken place. To Ruchi Bhatia, our South Asia economy editor there in Delhi for us. Before we go, just a last look at CXMT. Well, not the last look today. I guarantee you this will be the start of many stock checks of the stock. There we go, 470%.
Oof. Yeah, session highs, it seems, right now. So already, if we continue at this rate, right, we're talking about the second largest listing in mainland after Agbank, largest mainland listed company by market cap, surpassing ICBC already. So certainly, we're checking literally these A-share listings, right, and the debuts that we've had. Yeah. And just like the triple-digit gains that we see, really, and we'll see if this continues, right, for CXMT. But for what the sell side say, they still seem to be very bullish because, in terms of the runway for growth, not just in terms of market cap, but even just the technology, they say there's still a little bit more runway there, they say. Okay, it's the start of many interesting days of coverage across the stock itself. We're up 470%. Turnovers now north of 100 billion renminbi in just the first hour and a half of trade. Lots more ahead. This is Bloomberg.